Wednesday, September 18th. Market analysis, Stan Ehrlich. Good morning. 10:03 California time. We start out with the indexes, go to futures, and sometimes some other stuff that's important, like cycles, sectors, seasonal tendencies, crypto, forex, maybe some other topics. But today we're going to stick with, because we got the Fed announcement coming up only in 1 hour. And it probably will move the market. Now, the indexes have troubles. They're up against resistance. Even yesterday's new high for over a month didn't hold. Market came back down and closed approximately unchanged in general in the indexes. And that's not particularly good. Bullish. Today, at the moment, we're up slightly. For the S&P, it's only up a half a point, which translates into about a 5, and we're up 4.25 on the E-mini. So, going nowhere fast. Inside doji, no lower low, no higher highs. Apparently, waiting for the Fed announcement. They're highly likely to lower rates, but we're not quite certain. There's not a confidence level of exactly how much. So that change of the amount of lowering of rates is going to be the reason, more likely than not, as to what happens to the market. They lower it a lot, the market will probably stay here or go up. If they lower it a little, disappointingly small amount, probably the market's going to go down. Now, I'm voting down because I have expectations from a technical standpoint that this resistance area in fairly overbought, but not quite as overbought as I like for a signal, levels the last couple of days. So we're high on the scale, but not above 75. My level, 75, for being overbought. And therefore, we're not able to have a bearish engulfing that would be my signal, like we have here, red almost on the top of the market, like we had 3 of them here at the last important rally high. And you can see some other red signals. And the green is obviously a go buy. And we're at the bottom on oversold conditions. Exactly. And the last one we had was green, was very close to the low of the break. And it's been working at the moment, so great. As far as my signal is concerned, obviously I'd love to have market go up and make new highs and this signal to make more money. Our stop is right there, a little under yesterday's lows at the moment. And that's not the reason it's there. It behaves because of price action, and the trailing stop, the yellow dotted line, behaves because of various levels of overboughtness or oversold conditions. So it's not a standard, typical moving stop, period. Very customized. I'm trying to justify this market going down into the expected October lows. We've had the October lows happen since 1993 when the spider was developed. Every single year except for 3, there has been a significant, sometimes not that much profit, sometimes unbelievably huge, longer-term bottoms in October. Last couple of years have been great. So we'll see what happens this October, next month. But it's any time during the month. Could be the first day of the month, could be the last day of the month. But it's only been 3 times when we did not get a low in October, and it wasn't pretty significant, which it oftentimes is really important. Enough said about S&P and the October lows and the indexes in general. So this is the short-term chart. Session begins around unchanged yesterday afternoon. Doesn't do too much, which is normal. During the night, it sometimes gets a little bit more choppy. And then 5:30 California time, occasionally we have government reports come out and it becomes very choppy. This time around at 11 at 5:50 instead of 5:30, we have a minor high and it went all the way back down to make a new low for the session, but not below yesterday's low. Came close. Then it came all the way back up to where we are right now. The green line is our trade from several days ago, the green bullish engulfing, still on the books, and our current stop is right here. It's going to lock in a very, very, very nice profit. But great. So from the standpoint of the strategy, I basically want the market to go up, but my opinion, my 52 years of experience in this business is that this is trying to top out and I will get stopped out with a profit, but that hasn't happened yet. So the strategy is based on my half a century worth of working with the markets from a technical charting standpoint. And that tells me it's trying to, but not yet, trying to top out. Okay, enough of that. Spider did make an all-time new historic high yesterday. At the time it was happening, I told you that if it didn't close above the previous rally highs, it was danger point. It didn't. It slipped back down to slightly higher on the day, on the close at 1 o'clock California time. And that wasn't strong enough to stay up above the high that was made on July 16th. So here we are spending most of today in the middle of yesterday to the lows almost of yesterday. And we just haven't gone below yesterday's low, stayed below the low of yesterday and closed below. That's what I'm looking for. Next. It's the 1 minute on the spider. Just more detail. QQQ came close to yesterday's lows, came back up again, obviously still waiting, well, in my opinion, still waiting for the Fed announcement in 49 minutes. Okay. 49 minutes. So detail, we're still long the Qs from the bullish engulfing. Great scalp trade on that day. Overnight, still holding now 1, 2, 3, 4, 5 days, 6 days. Excuse me. And that's that. Now, the detail on the NASDAQ daily chart shows also a buy signal. We're still holding for the original date, 2nd, 3rd, 4th, 5th, 6 days now. Excuse me, got long on September 11, 9/11, and looking great. The strategy is doing extremely well. But I have my opinion that this market is trying to top out. Next, the 1 minute NASDAQ. You can see it's having a lot of trouble in the price range that it's at right now for the last many hours. So let's see if it'll turn back down again. Right now it's up just a little bit, 23.50. We don't have a trade or signal lately on the YM. It did make new historic highs, but with the same comment I made about the other index, if it makes a new high, historically in particular, and it doesn't close above all previous rally highs, you got a danger point. And this could begin a big sharp break. We'll see what happens with the Fed announcement. Even if it's bullish and the market does try to rally more, that could just set up a better sell signal. I can't get that out of my head that it's still trying to top out. Next, the detail on the YM, just not particularly interesting today, just up against a little bit of this session's resistance level it created. Next, the Russell, not quite the same, but resistance. We were long the Russell, and we got the exact low day on the Russell, September 11th, 9/11, and we got stopped out yesterday A very sharp rally pulled our stop up sharply enough that when the market started to slip back down, we got hit, and the trade was getting out of a new long at 22.43 approximately, and 21.29 entry on the long side, 9/11. That's it. Trade was great. We're out. Happy. So far, we're trading at the moment below where we sold out, which is nice. We'll see what happens. Russell detail, not particularly significant to me at the moment. Let's go to interest rate futures. Bonds did make a new low today, below the lows of the previous 3 days, almost below the low of the last 5 days, was overbought, did bump against a bear trend line, and now showing me some evidence that it's starting to roll over. Now, remember, this is kind of a complex situation. There is a major bottom in bonds that has broken out to the upside approximately July 26th. It says we're supposed to go up to about 140 almost, 139.22, 30 seconds. So calling it 140 is close enough. A hair under, but that's good, 140. But the formation does allow for a dip all the way back down to its original neckline, which during October, a magic month, the price levels I think the bond market's going to come back down to are within this green circle, which is the month of October, and between the top of the neckline and a couple of different support areas. So I'm looking for the market to come down from where it is right now at 26.11 down to at least 20. That's a 6-point move to maybe 115, an 11-point move. Pretty substantial. And now look at this. 10-year notes. Yesterday had a bearish engulfing at a resistance line and has a new short position ER1 overnight, and it's doing okay, down 17 ticks at the moment. We have a little tiny 1 day long so far trade line right in there, right there, and I'm looking for this market to move from this level, 115 approximately, down to about 111, maybe 109 during October, during this green circle. That's my forecast. It's going to end up being a double top with a sell signal on the second high. The double top, great entry if it works correctly. They don't always do that. Some of them don't work. Frankly, the most important thing that once you get used to analyzing the stock market and coming up with trading strategies is your protective stop level. You know you're going to be wrong. It's part of trading. Don't lose a lot of money. Your protective stop has to be relatively manageable. You're going to have profitable trades. Let them be as big as they can be. I don't like targets. They cut your profit short sometimes. Sometimes they work pretty good. And I am very conscientious about my risk factor because I know I'm going to be wrong sometimes. But when I'm right, holy moly, I am right to a gigantic amount. Next, oversold conditions in a support area, supposed to lead to a rally. Past tense, it's rallied for a week. Now what? Coming up against a resistance level and a previous bull trend line. I think it's turning down. I'm looking for a test of recent lows. I'm looking for lows under 64. Next, natural gas. Kind of the same comment. I don't trust the rallies. Too much resistance overhead. Didn't quite get overbought, but it could be turning down now. And after a while, I'm looking for, even if it does make a little bit more strength here toward the resistance level, it might, but I don't think it's going to rally much, if any now. And I am looking for new lows for the trend. Next, I'm bearish. Heating oil, I'm also bearish. But oversold conditions in a support area has led to a little bit of a rally, which could extend up to, I wouldn't be surprised, 2.27. So this has more elbow room up, but it's a bear trend. I think it's going to top out on the next rally, and we'll try to pick that for you and make new lows after that. Give it a couple of weeks to rally if it can. I just generally don't trust the rallies. Let's look at gold, silver, platinum, copper, beans, oil, meal, corn, wheat, cattle, hogs. In that order coming up. Now, gold's overbought, trying to top out because of the strength we have had, and the breakout has been successful, and it's a couple of days up. My first downside objective is just a test of support at 25.60. But I've got a problem. Silver and platinum look pretty bearish, are starting to act bearish again. And I don't think gold is going to hold here. I think it's going to drop back into the same big trading range. So I need to be very careful about implying a continuing bull trend, which I'm not. I got to see how it handles this 25.60 level. Minor and a little low for the last couple of days in silver. Head and shoulder top formation still the dominant formation here. It has an objective of 24.5, and that's what I'm looking for. So now I need to figure out if it's going to hold these support levels, and the answer is it might bounce off of them a little, but that's the important key word, a little. A few hours, a couple of days, not much of a rally, and then drop into new lows again, or just continue dropping down point blank. So once it gets as low as 28 to 27, that's critically important to see if it can break down even further to get to my minimum objective of 24.50. I'm bearish. This could be the beginning of the next big leg down. Platinum, same commentary. Overbought, close to resistance, head and shoulder top, no changes there, looking for support to be tested and drop off to its minimum downside objective of 809. Yeah, 808, 809. Next, high-grade copper. Different story here. We have sort of like a double bottom. It's not the best I've ever seen, but let's call it a double bottom. The first low, we've got a couple of buy signals coming off of that low. They worked very nicely. Then it topped out at resistance. Then it came down to the previous price levels for its previous low and turned around with a bullish engulfing ER buy signal on the exact low day. Yay! But we've come back up to resistance where it stopped before, failed to have any upside follow through so far after it made a minor new high, trying to break out of this double bottom, and it's still firm, up a little bit now. And if it closes, let's say at 4.32 or higher, you've got yourself an upside breakout, and then the expectation of the objective of 4.6 would kick in. Right now, will this resistance area stop the whole thing like it did before and turn down? A little iffy. The next couple of days will tell the story. Next, soybeans, grains. We got a sell signal a few days ago. Market's not particularly cooperating, going pretty much sideways. The signal before that was a buy signal at the bottom, almost exactly at the bottom, and it did work, past tense, very nicely. Grains across the board are in a long-term bear trend, multi-year. As a result of not having very much time developed since any significant new low, and not much of a rally except up to resistance levels and turning back down again. Because of that, you've got to maintain an intermediate to longer term bearish opinion because there just isn't any major bottom. So I am bearish. I'm looking for a test of lows and making new lows. And I think we're on our way down. Soybean oil, same comment. New lows for quite a while, not necessarily multiple years, but that's about the only one that hasn't done it, and it's almost done it. Resistance has stopped the rallies. I'm looking for new lows. I'm bearish. Don't have any downside objectives at this point. But rallying for a day or two doesn't really do anything for me. We're just testing resistance right now. I think it's about to make new lows. Soybean meal did rally nicely off of support and off of oversold conditions. No reversal, unfortunately. Not like the one we got at this bottom. That was great, February 29th. Not like we got a sell signal in the top of the market exactly to the day at 529. And when I say the top of the market, I do mean exactly to the day most of the time, unless I mention it was part of the top or almost the top. But that's the high. And that's the low. Okay, neutral to bearish and looking for new lows. Corn, same thing. What can I say? I'm just repeating myself. Wheat, again, same story. Yeah, we got the bottom, but what does it mean in a bear market that doesn't really follow through? You're going to make new lows again. You're going to get small rallies. They're not going to go very far for very long. That's exactly what I'm almost positive I said on August 27th. And so far, that's what we got. And we got overbought. So I'm looking for new lows. Now, cattle. A little rally in progress, having trouble at a previous bear trend line. Plus, it's very close to resistance. I think it's about ready, maybe not quite yet, to turn down. So we might see a minor new high here, a little bit stronger, but I'm not looking for anything like a 190 or a 185, maybe 181, 182, and turn down anytime now. Hogs. A little friendly at the moment, gigantic sideways trading range for well over a year. Can't, come to any kind of major conclusion here. No signals, getting close to overbought. Pass. Let's go back to the E-mini real quick. Coming back up a little bit, not much, that's for sure. 1 minute chart. Yeah, it rallied up and topped out and slipped back down slightly while I was talking here in the last 20 minutes or so. You have a great trading day and profitable trading to you.